We're back yet again, ladies and gentlemen. Took a little bit to even get that out. Didn't know what to do. Obviously, no shocker. I missed yesterday. Wasn't home. Haven't had an off day since Saturday. Won't be lying to you. By Saturday, I mean that's right, the previous Saturday. So we're talking a long work week, over 10 days so far, and working overnight. So the hair might be a little rough. The sleep is at an all-time low, but we'll still continue on. We grind for this. This is what we do. So we're going to look at Procter & Gamble stock today, and we're going to make up for the ones we lost yesterday with Coca-Cola and IBM, the ones we want to talk about that I didn't have time to because I wasn't at home. So let's take a look at this and see what we got. Obviously, we have Netflix on tap later this evening, so stay tuned for that. I posted a little bit of a poll yesterday, whether you like the face cam or not. You can even comment face cam, yes or no. Let me know. We can do whatever you want. So Procter & Gamble here. Stock's up nearly a percentage point right now. Did start off the day pretty rough. We're talking about starting the day down around a percentage point too. Again, they reported earnings prior to open, so we'll see what that might have been. We have a lot to talk about in this one. There's obviously a lot going through here with the recent vaccine shutdown. Due to some issues with blood clotting, they had to completely stop using the vaccine. So that's going to be, I think, a big story of this. And news on that will be really what does it. Overall, it's a boring stock as far as movement's concerned. It doesn't see much movement. You look over the past 5 years, it's just a consistent play. In 5 years to be up 70% when a lot of other stocks are up quite a bit more than that. It's not insignificant for sure, but again, most of this recovery was because of vaccine relief from their dip to their high points was really because of the concept of a vaccine. So just think about that. So GAAP EPS of $1.26 is a beat by 7 cents. Don't worry, I talk with my hands sometimes. And a revenue of $18.11 billion is up 5.2% year over year, and a beat by $150 million. Now, one thing I like about this company is the product diversity for sure. So this is a company that's got a wide swath of products, but I do believe this is a company that come next few quarters is going to be facing some really tough comp sales numbers due to the fact that a lot of their products for health and wellness are going to be focused. They were a big focus as far as pandemic spending was concerned last year. People went out in droves to purchase these products at incredible prices even. People were going crazy over hand soaps, and sanitizers and the like. So keep that in consideration. Even stuff like shampoo, the laundry detergent, all of that. So Procter & Gamble, obviously a maker of all these products. So it's going to be a tough comp sales year for them. But so far, retail sales have been up for the year, quite substantial, which is kind of a shocker. So yeah, keep that in mind. Organic sales at 4% versus a consensus of 3.7. Again, obviously some big wigs, they're pushing for some organic numbers here. It's all about sustainability now in the corporate world, so that's why they're going to talk about that. From there, CEO, I believe, yes, Mr. David Taylor, and I believe he talks like this. We delivered another quarter of solid top line, bottom line, and cash results in what continues to be a challenging operating environment. That's all from Kermit, but our David Taylor, I should say. We got some more, but let's get into the juicy stuff. Not going to make any gross faces because the face cam's here now. Typically, I might. I'll save you. I'll spare you from that one. Reports organic sales 4%. I just looked at that. Don't you dare make me do that. Organic sales in the beauty segment, though, up 7%, and 7% for fabric care, home care segment as well, while the baby family segment saw a 1% drop in organic. Organic baby food, I don't know if people necessarily care that much about that, just being honest. I think they just want to feed the best food to their baby they can, and if they see some strange organic stuff, they might not. So we'll see what that looks like. Adjusted gross margin came in at 50.7% versus a 50.9% consensus. Nice to see on that. Operating cash flow, $4.1 billion, pretty nice operating cash flow, can't lie to you. Free cash flow productivity was 106%. Procter & Gamble returned $5 billion to shareholders via $2 billion in dividends and $3 billion of common stock repurchases. Obviously, repurchasing the stock even at high levels, pretty impressive. It means they're confident in this stock and what it's able to do. Don't mind me just looking here at a little key on the desk. I don't know why I have a key there. Don't remember where that came from. Looking ahead, organic sales growth of 5 to 6% for the full year. And core EPS growth of 8 to 10% versus a 10.9% consensus. Definitely part of the reason why the stock might have been down pre-market. A little bit below guidance there for sure. They expect to pay more than $8 billion in dividends for the full year. That's what I like to see. They returned $2 billion, obviously, in this quarter alone, but $8 billion, I mean, that's on pace, you know? They're probably going to see a slight increase in dividend this year as well. They should be announcing that shortly. I don't remember if they've announced that yet. I don't actually own Procter & Gamble, believe it or not. So, also increases its outlook on buybacks from up to $10 billion to approximately $11 billion for the fiscal year. So they've got cash to spend, okay? They've got cash to spend. Now they expect to return 19 nanobillion. I don't know. Nintillion. Neptillion. That's no. Look, I don't know. They meant billion, but the editor typed an N instead of a B, and they don't proofread their own crap. You hear me, Seeking Alpha? Look at this. I could have thought that meant noctillion, okay? But it doesn't. Let's look at this. Oh yeah, look at that. That's a child just brushing the teeth, and that kid's just enjoying a cup that says P&G. No doubt about it. Obviously, EPS line. Ooh, when you highlight it, it's, oh my goodness, it turns yellow. This is whoever the web designer is. Procter & Gamble, you've earned some points in my book. Your web designer makes me happy. Makes me happy when I highlight stuff and it turns yellow. Bold. It stands out. EPS up 13% versus the prior year. Pretty nice to see. Obviously, in terms of segments, overall, we like to see net sales. That's what I'm going to look at here. Beauty segment up 9%. Grooming 4%. Healthcare 4%. Fabric and home care 8%. Baby, feminine, and family care just flat, nothing super crazy there. And they have a separate segment for organic. That's just like, come on now. We're pandering a little much, you know? Just let it be part of the business. You don't need to make a separate segment on the freaking chart. Sorry. So these are all said and done. Good numbers. I will look at the balance sheet because we like looking at the balance freaking sheet. Here it is. And now I can highlight properly. That wasn't the balance sheet yet. Sorry, I got too excited. Here's the balance sheet. Now that look at the highlights. So overall, total current assets at $22.6 billion. Now this is a 6 months comparison, and 6 months ago they had $27.9 billion. You see definitely a big decrease in cash and cash equivalents. My assumption is going to be that was spent into paying off some short-term debt, I hope. Or maybe some investments that I'm not aware of. I haven't heard of anything crazy, but I'm going to guess that's what it's for. Total assets in general did fall as well. $116.7 billion compared to $120.7, so a decrease of $4 billion there. Total current liabilities at $32 billion compared to $32.9. So again, not necessarily the theory I was projecting. They did pay a little bit of accrued and other liabilities for sure. Accrued expenses got paid a little bit. It grew. What am I talking about? Debt due within a year, they paid off a little bit of that is what I meant to say. Total liabilities in general did decrease though, 69.8 compared to 73.8 billion of 6 months ago. So stockholder equity actually did rise just a wee bit, pretty well neutral, flat. 46.9 billion compared to 46.8 billion. And again, I mean, frankly, that's only a difference of a solid 40 million. I mean, I'll take $40 million, but in this sake, it's not that significant in terms of 6 months comparison. So balance sheet's still in pretty decent shape for this company. Obviously, you look at the stock's valuation. Trading at a PE of 26 is relatively high for this company. It's typically one that sets the market standard for PE ratios, typically going to be on the lower end, right around 20. Now, the thing about this current market is we're trading at a PE ratio of closer to 35. So, all things considered, the valuation on this thing is not incredibly expensive. Market cap of $339 billion. It's not incredibly expensive. Let's just be clear with each other. Could be a lot worse. But that is just the market we live in. A company that shows very minimal growth like Procter & Gamble is one that's making some monies. Okay, they're having some pretty expensive valuation for what they typically would historically, but that's the market. Good consistent hold still with Procter & Gamble. No matter when you buy it, this is a consistent company that really won't see significant downturn at all, in my opinion, because they're such a well-diverse company and people know and love their products. So that is what I got for you today. Hope you enjoyed and have a great one.